to be complete in my answer about why I'm down here, I have a 14-year-old dog named Joey who started coming down here with me on the trips that I made down here, and it's kind of dog heaven down here. Dogs in Mexico, you can take them anywhere, like restaurants and any stores and beaches, the beach, of course, and because I walk everywhere, he gets tons and tons of walking in with me, so he stays healthy. I, quite frankly, was lonely in Utah, which was really weird because I just love Utah. I don't think I'm done with Utah right now in any way. Like Snowbird Ski Resort is kind of my girlfriend or my wife. I can't imagine not being there for the rest of my life. But
you go skiing down there in Mexico.
No, there's nowhere to ski down here, man. There's surfing, right? So I went from being I was a ski photographer actually for about 10 years and out on the mountain every single day in all conditions, and became and Snowbird's a really difficult expert mountain. And, so got to be a very, very good skier. And it's my jam. It's my passion, and kind of feel like I was built to ski. And I thought I'd done a little bit of surfing, taken some lessons in Hawaii and other places. And then I really felt like surfing might step in as a sport that would grab me. And I'm 52 and I'm in good shape, but it has not grabbed me and replaced skiing yet. And that's largely a product of me just not giving enough time in the water. I'm so at home at 11,000 feet in the Rocky Mountains, and the ocean is like, I grew up in Cincinnati and lived in Utah and vacationed on Lake Michigan. So like the ocean is really new. Yeah. And I feel it's amazing to feel like such a beginner at something again, like total rookie, and surfing's got this learning curve that you just got to really you got to give yourself to it. And it's as tough as I think probably just about anything to pick up and get good at. And golf. I won't get into my whole thing about golf, but do you play golf?
I do. Well, I play at it. I'm not professional at all. Like you in surfing and snowboarding, it's not something you really ever perfect in my mind. You get.
Yeah. I have such I'm not kidding. This might sound a little bit funny, but I fired golf, man. I really made a conscious choice. I played my whole life, but not nearly enough to get good, and not nearly enough to feel good about the way I played when I went out. And every time I went out, I was like, man, I'm spending all this money and time, and it's like I'm choosing to do this thing that should be fun, and it's fun to be out in the outdoors and be with friends and everything. But I experienced so much frustration. It's like I'm choosing to invest in feeling bad about myself. How does that happen? So I actually made a conscious choice to just kind of quit playing golf. It was go one of two ways. It was I've got some high school buddies that are, great. They're great golfers, but that's because they play all the time, and you have to do that with golf. So
you do.
What
I want to catch up after the thing on coaching and Columbus, Ohio. So we can do whatever you want.
Randy, what do you love to do for fun?
After coordinating an exit from the corporate world, roll back 10 years ago to 2023. I left the corporate world in 2023 doing real estate full time. I'm a volunteer. I'm a fractional CFO. I still have a syndication business. I also have started a multifamily coaching business and mentoring group, trying to get some traction there. So I'm keeping real busy. I'm on a corporate board. But for hobbies, pure hobbies, I've got 4 kids that keep me pretty busy and 5 grandkids, and going around to see them. So I try to play golf once a week, and I'm no good at it. I just want to get less bad, put it that way.
Right.
But
Point, I think that's the key. You got to limit your expectations, I think. And I don't know, that just doesn't, I'm not wired that way. I hate doing that kind of thing. But anyway, and you're in Houston full time.
But I'm from a town that only you would probably recognize, of Findlay, Ohio.
Oh yeah.
And And I grew
Finley.
up in Findlay, Ohio, lived in Toledo, lived in Cleveland for a lot of years. And I can go through that in the podcast, blah, blah, blah. Came down here for business. And I don't miss the winters, put it that way, in Michigan and
Yeah.
Ohio.
Yeah. Finley's kind of northeast Ohio along 71, I believe.
75.
So-
South of Toledo, northwest of Columbus.
Right. Yeah,
It's straight up 75.
Kind of Lima area. Roughly.
Lima, Findlay, Toledo.
Yep. Got it.
Lima, Findlay, Toledo.
Yeah, that's the route we take to our cottage up on Lake Michigan from Cincinnati, where I went my whole life. So, Randy, you and I we share roles here in terms of being coaches, and I've been coaching multifamily investors, aspiring multifamily investors coming from other asset classes or entry level operators, owner operators, if you will. Entry level is not the word I'm looking for, but talk to me about. Actually, I'll just say one thing about it. I love it. Like, coaching for me is like absolute, like, next level, 10x, like, mission, purpose, meaning for me. It never feels like work. I love podcasting. I love these conversations as well. They fire me up, and coaching is sometimes, and maybe often even, like when I coach one-on-one, which and I have a small group format as well, but the scale business, like, sexy format right now is courses and group calls and that sort of thing. But I love the getting in the weeds with people one-on-one as a coach. And so it's provided just this level of meaning for me, and like getting to experience some things about myself that I think call on like some of my highest skill sets and whatnot. So I love to get your perspective on coaching, and also it's Multifamily Maestros, I believe.
Yes.
.com. Yep. That's the website for your coaching.
Yep. Multifamilymaestros.com, all one word. So thanks, Tate. Love to answer that question, and really, it's a privilege to be on your show this afternoon.
Welcome. I love having you.
I think you summed it up pretty well. So I'm at the season of my life where I don't need to do coaching. Mm-hmm. I may make a few bucks for it, but really the primary purpose is to give back to the next generation. And I think, it may sound cliche-ish, but there's been so many people that have built into my career along the way for a minute or months or years that you just recognize I would not be anywhere without them. I'm a product of myself of some of the what I call the big box mentoring groups. I started out at Lifestyles here in Houston. I moved to Sumrock for a while.
Yep.
I was in Rod Khleif's. Yep, Brad Sumrock. I was in Rod Khleif's mastermind for several years until he disbanded that. And I'm just, I'm sure you can relate. This is a business that you never stop learning, and the markets change. And so the value of education, I say, I invested, or my parents invested a lot of money in my college education years ago. I invested professional when I was in the corporate world, keeping my skills current. And so if you're going to do multifamily, to be an investor, you really need to educate yourself, whether it's an LP or a GP or anything in between. So like you, I enjoy those questions, and you realize that you may have some experiences. And I tell my students that I can't prevent you. I can't guarantee you're not going to make any errors, but I can guarantee you won't make the errors that I made because I'll help you work through it. So I enjoyed it too, as like yourself. It's a lot of fun.
Yeah. So I love what you touched on there, which is just kind of this concept of giving back, and also you acknowledging the people that invested in you as, one of the big reasons why you have been able to do what you're able to do. And this idea of mentorship, my buddy Chris Roberts, who's a multifamily guy, and did a TED talk on that you should, so everybody should look him up. I'll link it in the notes. It's the power. I think it's something about the power of unexpected mentorships, something like that. And he's got like this was a long time ago. He had a half million views. I'm sure way more now. But and then somebody I hugely admire, online personality podcaster named Scott Galloway, talks about like this desperate need that young men especially have for mentors, right? And how we as men like can create such a massive positive impact and legacy by stepping up and just being mentors for those that need it most. And obviously, when a multifamily investor, whether it's a GP or an LP, hires us, and specifically for the purpose of doing business and whatnot, we're still coaching a human being, right? And we're walking through all the things. Eventually, when you're especially one-on-one with people, you're touching on everything kind of often. But like as a father and a grandfather, community member, maybe just speak to like the juice of being a leader and a mentor. What does that mean to you?
Well, you hit on one of my favorite topics, which is leadership. And on the mentorship leadership vein, I got involved many years ago becoming I'll call him a disciple of, or a student of, John Maxwell. I don't know if you've ever read any of his books on leadership, and specifically, what does leadership mean? It's kind of like I always say, leadership means, let's talk like similar to love. It means many things to many different people. Mm-hmm. But simply, my definition of leadership that I've acquired over the years is to be able to obtain results and build relationships. And in that, in our social media world today, and like you said, you can get all kinds of courses online, and people think it's cheap or the easy way to go. But there's really nothing that beats old-fashioned mano-to-mano communication like we're doing right now. I still prefer a cup of coffee with somebody versus doing this, but the miles separate us. Yep. And so I think, as a leader, that doesn't mean you have to be a Brad Sumrock or somebody like that, or a Michael Blanc or Jake and Gino. They are certainly leaders. They're certainly leaders, but you can have an influence, i.e. leadership, in your small community of network of individuals. Mm-hmm. You don't need a special title to be a leader or, influencer, whatever we want to call today. Today we tend to call it an influencer rather than a leader. But one of the certain things that John Maxwell taught me years ago is leaders breed. They create other leaders. And so it is in mentoring, leadership, whatever buzzword you want to put on it. That's all we're trying to do, is create other leaders in the space, and recognizing that maybe I've got a little bit of experience that may be valuable to somebody else, maybe not. It all depends on what they want. So, I think it's mentorship / leadership on a much wider scale. And
yeah, there's so much there. So, I think just to touch on the mano y mano, as you put it, like, obviously, ideally, you and I are in a studio sitting together and having this conversation. But, the practicality of me being in Sayulita, Mexico, you being in Houston, Texas, and being able to do this through technologies, I consider leverage. I consider it actually a blessing and a gift if used correctly. And but it's specific to one-on-one coaching. Talk about like what kind of the essence of what you get or what you see that your clients get out of that format that maybe you can't get at a weekend conference, or listening to a podcast or reading a book, or any other kind of inputs of influence. I just kind of made that concept.
Well, talk about that. We all learn differently, as you know, and there are some who would say, I would say I'm a visual learner. I like pictures and I like graphs and charts, and others, I prefer community of people and learning environment and teams environment versus sitting behind a computer like this and reading a PDF online or a PowerPoint. So we all learn differently, but I think that community is something that is sorely lacking today. And so in our coaching course, we try to say, I don't want to disgrace any of the big box educators or mentorship groups, because they serve a very fine purpose. but we're trying to provide a smaller community, first community, but also personalization online to like this and one-on-one. Because the biggest benefit I think you get of any mentoring group is to be able to pick up the phone and say, "Hey, Tate," or "Hey, I got this issue," or "I got," I can go out and research it and find all kinds of YouTube, but I want to just talk to somebody about it. And
or I need you to introduce me to somebody that can help me with this. Or who
yeah,
do you know that does this, right? All that stuff. Yeah, 100%.
your contact list is invaluable.
Yeah.
Even though you're where you are, you've got contacts across the country, and so do I. I don't know of everybody, but I can probably connect you with somebody in a different market, be it California to New York, because I've just been in the space 10, 11 years. And that doesn't mean I'm smart. It just means I've been in the space for a while.
Yeah.
But I think it's that personal contact that really people look for, and why they join groups like yours and mine, because that's what we're offering. And you can get a group call or something with that in one of the big box areas, but it's not going to be the same. So, we're going to offer course content online. We're going to offer group calls and personal calls as you need them. So
I love that big box, the label that you use. I've never heard that one before, but yeah, the Rod, in our industry, the Rod Khleifs and Michael Blancs of the world, like, and Jake and Geno's, those huge communities, which there's inherent, Raise Masters was a capital raising group that I was a member of. I could be Raise Masters' best salesperson. It just because the value that they offer in particular, and Jake and Gino, same thing. There's inherent value in a massive 400 person network of people that you have at your fingertips. But there's it's I guess like with anything, there's just differences between the models, and you could say there's pros and cons, I guess. But
there are.
But I would just say there's just kind of nuanced differences, but important differences, and the whole idea of attention being like today's most precious commodity right now. It's what everybody wants. Everybody's like trying to figure out how to get our attention, and they'll spend billions of dollars on it. And there's something about, let's just distill it down to like a one-on-one call. And it sounds like that's part of what you do, one of your deliverables inside of your program.
Yeah.
Like you and I right now talking, we have each other's undivided attention, right? And ideally, the listener, this doesn't always happen, especially when on podcasts and YouTube and whatnot. I actually, one of the reasons I love the long format podcast is and video podcasts is because you can really get in there with really, really deep in those conversations and into who people are and what their ideas are, what's like firing them up and juicing them up. But I mean, back to the point, you and I have each other's undivided attention right now in this moment. Ideally, we have the listener's undivided attention right now in this moment. And that is something significant in today's world. It's something significant in every world, but right now in today's world, with everything that competes for our attention, to be able to focus on each other and connect with another human being and share ideas and share the best of what we have to offer, each other, and just show up and be, contribute to each other's goodness and worth and value. What an awesome way to jam as a human being,
Well, I go back to the big box syndrome. So I relate it to, I'm kind of a do-it-yourselfer. So the big box, I can go into Home Depot and I can look for an employee for 10 minutes before I find somebody. I recently went into my local True Value hardware store. Somebody met me at the door.
Wow.
Yes, sir. What can I do for you? And took me back to where I was going. So it's that kind of personal approach that we're trying to provide versus, again, nothing wrong with Home Depot or Lowe's or any of those stores, or it's the advantage of going to a state school and being one of 40,000 at Ohio State, or going to a small private school where you're one of 4,000 or 5,000 students. Neither one of them's wrong. They both add value. It's just a matter of what's right for your personality. So,
Yeah, yeah, that's a great analogy. By the way, Ohio State, 66,000 students, either the third or fourth largest school in the country. I only know that because we own property in Columbus, so I've kind of got my finger on the pulse. My dad went to dental school there, and I grew up in Cincinnati, 2 hours south. But go Buckeyes, OHIO.
There you go.
Yeah, national champs this year. Like, and truthfully, I've never been a college football guy, to be authentic, but yeah. So, I mean, this is like, I think this is really like something, it's something to like realize is as we move into a future that is so unknowable in the way of how we're going to like use artificial intelligence in our lives, in our businesses, and on the planet, how it may use us, like what that might all look like. And, spoiler alert, like cut to the chase, that the people that know the most, the ones that like built this stuff and the engineers, they're the first ones to tell you, like, we have no idea how this is going to all go. Right. Yeah. So, but moving forward into that, and so many people are like, how to prepare for it. And how do you, it's like kind of preparing for death, life after life or death, right? Like, how do you prepare for something you have no idea what is, right? And so, but it seems to me like there's, Tony Robbins says success leaves clues, and maybe that's not the exact analogy, but there's some hints here. There's some crumbs here that I think people can look towards. And that is like attention, again, as a currency. Look at Instagram and the algorithms, and YouTube and the algorithms, and all the other platforms, TikTok, right? Like, it's not only is it like, at this, I would say, I think arguably the most valuable commodity on the planet, but that's not going anywhere, and it's likely going to expand in massive ways and multiply in massive ways. So, like, looking at like how and going back to this idea of leadership, how as a leader can you, like, let's just take it beyond the whole idea of profit and loss and making money. How can you like effectively get people's attention and keep people's attention in a way that is meaningful, that you feel good about at the end of the day? When you look yourself in the mirror, you know that you've made a contribution to the well-being and goodness and thriving of a human being, or one human being, or many billions of human beings. I don't know. I'm kind of like rambling here and riffing a little bit, but like, I don't know. What are your thoughts on all this?
Well, I think it's to relate it to multifamily and education.
Yeah,
I think that we all want to have students that are successful. It's also a proven fact that I don't know if it's 80 or 90% of the people that pay money for our education courses never do anything. Zero, none, nada. And so that's discouraging. And I think one of the ways, so we try to have a discovery call with students, potential students, mentees, whatever you want to call them, and really try to ferret out what they want and how much time and effort do they have to put forward. That's one way to hopefully increase the probability of success.
Mm-hmm.
Then, I think in this business, we haven't done it yet, but we say if there's a deal that's good enough, we may come alongside of you. And depending on where it's at and if it meets our buy box, et cetera. That's not a guarantee, but unfortunately, people rely upon us too much. They want the 12-step process, or I should say 12-step, 1 minute each to success. And you and I know it doesn't happen that way.
Yeah, not a multi.
You've been at this for a long time. I've been at it for a long time. It can happen, but it ain't going to happen quick.
Yeah.
And I think that's the other thing I try to get through the potentials is say, this isn't a get rich, get quick. If you want to do that, go out and flip houses. That's the quickest way to make cash. But if you want substantial growth continually over a period of time, great asset class to be in.
Uh-huh.
Great asset class to be in. And you too can be successful. As the one person told me a long time ago, guys, especially speaking to the guys out there, we want to recreate the program. We want to take Tate's program and tweak it and do this or that, and I can make it better, versus just follow the steps of those who have gone before you, and you'll be successful over a period of time. You don't have to reinvent the wheel. Just follow the playbook. And it's not rocket science. It's just persistence, due diligence, work, and a little bit of capital. So
yeah,
it can be done.
So I'm going to go down a rabbit hole here. And I didn't know that this was like just below the surface, but as you were talking, I realized it was. And so like, here's where I am with multifamily right now. And just to be completely honest, and like, this podcast has been on the air for, I think, 6 years, 260 something, maybe almost 270 episodes.
Congrats.
The apartment gurus, right? It's all about investing in commercial multifamily assets, otherwise known as apartment communities. My company, Greenlight Equity Group, has acquired and underwritten and blah, 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 done, we own deals and et cetera, et cetera. So here's why I'm with it now. Since, let's say, spring of 22, when interest rates like essentially destabilized and ended up like quadrupling and going, maybe 5xing even. And then, we got into everything else we get, all the ripple effects of that. I mean, the direct, obviously, impact on cost of capital, but then the way that it influenced the LP mentality, private equities mentality, and banks are banks, and they're just going to do what they do based on the money they can make based on interest rates. But here's what I found, Randy, and I'll just being completely like honest and even a little vulnerable here. We've put 2 deals under contract since that point of time in time, say, let's just say April of 22, and not been able to execute on buying them, and have incurred huge losses of liquidity of our, which is precious, right? In earnest money deposits and due diligence expenses, right? And both deals were, obviously, I wouldn't have put them under contract if I didn't think they were like really good deals that had compelling stories and reasons that LPs and private equity like should be excited about them. And great, and both of them were in Columbus, Ohio, which is, if you've listened to other episodes of the show, like you know my jam on Columbus, Ohio, and how bullish I have been on that. And like the pain of that has been so significant. It's been like just game changing. And so, one of the things that many listeners might notice is like I haven't even published an episode of the Apartment Gurus in a while. I think this might be the first one in 25 that we're publishing. So, and I'm still doing it. In fact, I've got 2 deals that I've been working, and one under LOI and another. So I have conversations every day with people about deals and trying to get deals done, and I'm still coaching inside of it. But here's what I'm not doing is I'm not taking on new entry level owner operators as clients, because I don't feel that the game has changed so much since I started coaching, and it's gotten. And I think any capital raiser, if they're being real with you on this, will tell you that it is so much harder to raise capital now. No matter what you do, you can be a member of Raise Masters, you can work the system, you can take somebody's formula that's done it and like replicate it and everything else. And like the risk of putting a good deal under contract and not being able to like raise the equity, like in the 3 months or 4 months that you have to close the deal, is, in my opinion, just from experience, and I get that it's only one person's experience, but it's gotten to be so hard. And I feel that it's a risky proposal myself, just because I got burned twice big time. And so, and then you throw in the uncertainty of the last 100 days of what's happened in the United States economy, and how the huge, profound effects that's number one having currently on things like the 10-year treasury note, which most of our mortgages are based on interest rates, and also like the cost of living and tenants' ability to pay rent, and so therefore like the security of the functionality of the assets themselves. You throw that in there on top of everything else that I had already described. I don't know, man. Like I'm a little bit kind of peace out right now in multifamily, and I'm just being real. Like I don't know that there's ever been. Well, I'm sure that I know there's been many more people that have done way more content than me on multi. But I've been an advocate for this endeavor for a long, long time with a lot of passion and a lot of optimism. And I'm a wired optimist, right? Like I always see things working out, and somehow, some way, it's not only going to work out, but it's going to be better than we ever thought it would be. That's how I'm wired, quite frankly, and I'm committed to that. But right now, I'm just being real about like how I feel about multifamily investing. So I'm curious, does any of that resonate with you at all, and what your thoughts are on it?
All of it and more resonates. So, lots of thoughts. So you got a lot to unpack there. We could spend another hour talking about that. But I mean, reality is, when you and I got into the business in 2013, almost 12 years ago, and the old adage is all tide lifts all ships. Or
what a run that was. I mean, that's like 2008 was the crash, and then it stayed really, really flat until like 2011, 12, and 13, right? And then that uptick from that point to, let's say, 22. Oh my gosh, what an expansion.
Just put money in deals. You didn't, just rising, the old adage of rising tide lifts all ships is the cliche of the
you couldn't miss. Right? Yeah, totally.
It didn't matter really whether it was a C, B, or A, just as long as it was in a growing market, Columbus, Ohio, Houston, Texas, or any else place in the Sun Belt, you'd do very well, unless it was totally mismanaged. But so I agree with you. So I also have had some battle scars lately. It used to be when I got started, the short story is you've lost money that way. I've lost money on having to sell an asset as it was coming up for, we bought it in variable rate in 21, 22, I forget, 3-year to 1-year extensions. And, the market crashed and interest rates went up 5.5%, perfect storm, as you said. Long and short of it was we had to sell the asset for loan value. And that was really difficult to let LP investors know they lost their money. However, though, and I'm glad to hear you haven't given up, because let me give you a little pep talk I was going to say, and for your listeners. It goes back to the macro environment. Do you believe in this asset class? And over the long haul, 30, 40, 50 years, whatever you want to say, I still got a long runway in me, hopefully, God willing. The asset class still can't be beaten. On a macro basis, we have a shortage of units in America.
That's a huge. That's such a good point. That's a massive, massive point. Like that, like everybody talks about housing, the cost of housing, and which is a function of the shortage of supply of housing. So yeah, excellent point.
And anybody you listen to, depending on who you listen to, should say it's anywhere between 3 and 8 million unit shortage across America. That's not just any one given place. So the macroeconomics, and so I did a deal in 24, and I had one of my investors say, you're still pushing deals after this last deal you had? And I said, well, look, nobody is beating themselves up more than me over that. I can tell you the lessons I've learned, but the reality is I'm still investing. I'm still going to be buying assets. I mean, you've lost money in the stock market. You've lost money in your 401k. If you've been in it for any length of time, there's been cycles, ups and downs. Did you stop investing in your 401ks? No. And so I get if people want to get out, they don't want to invest. And I echo with you, never been harder to raise capital, even for people with stellar records, because investors are just skittish. And I don't blame them. They can put their money in treasuries today and make 4.5%. Risk-free versus putting it in a multifamily and getting 6 or 8 over, 5 or 7 years, and then a big payout in the end. But so I agree with everything you said. And I am cautious that as I talk to students and mentees, given the full disclaimer, this is not for the faint of heart.
No,
But
that's another great point, man. I've said that so many times. This business is not for the faint of heart, and I think it's time that anybody telling that lie or the lie that it's easy and anybody can do it and et cetera, et cetera. I think there's been I don't hear it so much anymore, but there's been a lot of that going on, and to me, it's just not authentic. It's not truthful, and that's an excellent point. It's not for the faint of heart.
And for me, I put forth a 10-year program, a 10-year plan in my own mind to exit the corporate world and to navigate my time into this that I've done, as I said in the pre-meeting, in 23. So in 13, and it still works on that time frame to educate yourself, to begin to invest, to learn the business. Mentor once told me, don't learn the tricks of the trade, learn the trade. So you have to understand what you're investing in, back to the educational aspect of it. And over the long haul, you don't see the big boys getting out of this market. You don't see the private equity groups and that stuff getting out of this asset class. Are they more? And so I would be of the opinion, you buy in all markets, up, down, and sideways, but you buy very differently. Yeah. So you and I are going to buy very differently today than we did a year or 2 years ago. Lessons you've learned and I've learned along the way. And so, to me, it's got a cash flow day one.
I think specifically another requirement is that there's got to be like an internal value add that's not dependent on what the market is going to produce in the way of growth. Forced equity, forced appreciation. Thank you. Yeah. That is that to me is it has to be there right now. And if that's there, right, and if you've underwritten like conservative exit and ideally a shorter exit, and I agree with you. And here, here's the other thing. I'm really glad you brought up the stock market, because the volatility in the stock market, like everybody's hypersensitive to that right now. We're recording this on, April 29th, 2025. And the Trump administration's been in office for 100 days, and economic policy has been, let's just say, a little unclear.
That's the politest word I've ever heard.
Just a little like, the waters are a little muddy right now as to like what the American economic policy is going to be and how we're going to treat trade on a global level. And we've seen points in the last 100 days at which like huge volatility on the 10-year treasury, right? And in the stock market on the same day. And so like, which is really what that means is that a whole bunch of capital in one day left the American markets completely. I don't know how many trillions of dollars, $8 trillion or something like that in one day. People are pulling money out of the treasury, therefore it's going up. And then people are pulling money out of the stock market, and therefore it's going down, which means people are taking capital out, and which, by the way, also means that the dollar is weakening, right? And so globally, you mentioned private equity, the big boys are looking for maybe, and I'm not making this argument necessarily, but I know what they're saying. They're saying maybe, America is not the sure bet that it has been until the last 80 years, until 100 days ago anymore. And so therefore, where do you go with capital for some sense of like a predictability, like uncertainty, like people want to know, and so if you're a CEO of any of the S&P 500 companies and you're hiring, you're building factories or investing in AI and you're raising capital, blah blah blah, like what do you do right now? And everybody's feeling that. And so when you look, so I think, to me, just to kind of bring this all back full circle, is like, I completely agree with you on the fundamentals of the need for housing, the shortage of housing inventory in the United States being like just an incredibly huge factor here, and makes investing in commercial multifamily assets very, very compelling versus say something like the stock market. Depending on what kind of company it is, like there's it seems to me like there's just a stability factor there just based on supply and demand.
Versus retail
But
strips near.
I think this is worth mentioning. I don't know that it's worth like expounding on a whole lot, but like to me, the big variable is like what's going to happen with the whole U.S. economy, right? Like particularly when you look at the dollar and what could happen with devaluation of the dollar, and then we could talk about how Japan mostly and China, like they own the treasury, they own most of the treasury bills out there. So like all they would need to do is like go nuclear on us and dump their position in treasury, which isn't in their best interest, which is why they haven't done it yet. But like, so, and I hate talking about like, cataclysmic outcomes. I like, it's not interesting to me even, but I think it's like, that to me is the only like thing that could, and I'm just kind of thinking out loud through all this, right? And you've helped me a lot here, Randy. Like that's really like coming back to like how sound is investing in U.S. multifamily right now. That's maybe the only thing that I see as a risk. Is
let me ask you a question. Now, you reside in Mexico. Where are you going to? Back to that macro economy.
Yep.
So like no one can predict the cataclysmic event.
Yep.
We couldn't predict COVID. We couldn't predict the crash.
That's right.
But we know they're going to happen. We just don't know what magnitude. Somebody was asking me the other day, what are you afraid of? I said, I'm afraid of a world war and the economic collapse, as you just said, to summarize.
Yeah.
But I said, right now, so maybe you increase your cash position, whatever that might be in your portfolio, but you still got to invest just to get a return, stay equal of inflation.
That's right.
And, you live in Mexico. You going to invest in Mexico or the U.S.? I don't know. Maybe you have a different opinion.
I think that's actually an interesting discussion. I think Mexico is poised really, really well for. I was thinking this, like say, more than 100 days ago. Even I think Mexico is poised really well for like some serious upside. I think there's some inherent structural problems that have to do with corruption from head to toe in Mexico that have held it back from being what it could be. I mean, there are next door neighbors and their natural resources are insane. Like they have been set up for a long time to like be, in my opinion, maybe not a superpower, but a big player. And they haven't been because in my opinion, just like this culture, it's not culture that I actually love the Mexican culture, but there's some inherent flaws in it, but like just the way that things are run down here and how the corruption that's involved, right? And that's what that's what the United States has been so like the brand of the United States, the reason and the dollar and the T-bill and the stock market, like the reason for its compelling like opportunity of the last 80 years and the unprecedented growth of wealth and capital in the United States economy. There's literally nothing to compare it to. And it's, in my opinion, it was built on the fact that we had, first and foremost, like a very, very strong, workable system that just supported the growth, the economic growth of industries, and R&D and everything else in ways that people all over the planet got justifiably really excited about and came here and came to the United States and did what they did. And, you can look at like things like law and order, due process, right? Like strong institutions, like research institutions, like our universities, like the internet, by the way, think about like how critical the internet is right now in terms and the Teslas of the world, the Apples of the world that have built everything they have built on the backs of the internet. the internet was literally created as a project of the federal government and about 20 different universities working together in ways that no single entity, even the government itself by itself, could never have pulled that off. And we have this incredible history of collaboration, of goodwill, of trust, of like people doing the right thing at the right times and playing by the rules and playing smart by the rules, but playing also by smart rules written by people that like created our Constitution, man. Like the creators of the Constitution, like they might not have gotten everything right and they might not have been able to foresee everything. I think we're starting to see some like points of exposure inside of the Constitution. But like for it to have worked the way that it has for 250 years, and not just worked, but like supported economic expansion and like the things like civil rights and the rights of women and Black people and everything else that we've done as a country, and for the most part have been a presence of stability and like playing peacemaker in a lot of cases. And obviously there's many examples of us not only not being peacekeepers, but like and peacemakers, but quite the opposite. I get that. But I don't know, man. It just seems like,
you hit it on the head. There's a bunch of volatility out there today, and there's a bunch of volatility. But I go back to invest in Mexico versus the U.S. You know a lot more about Mexico than probably any investor in the United States. So what do you invest in? You invest in those things you know, like, and trust. You know Mexico, so you view that as less risk than me sitting in Houston, Texas, saying I got no exposure and know nothing about Mexico economy or its properties or anything like that. So I think the majority of investors are still going to invest in what they know and what they like, which is the good old U.S. of A, because it is the greatest economic machine in the history of mankind.
It's unbelievable, man.
I mean, debt markets, the credit markets,
the middle class, like the creation of a middle class, and the way that it thrived and what it built, and like the level of like living standards and everything else, prosperity that it built. So, okay, let's for the sake of this discussion, let's just take Mexico out, but let's put like let's put Europe into that slot, right? So, and let's take you and me out of this in terms of know, like, and trust, and put in like somebody whose job it is to know all of these markets and to know like the nuances and the ins and outs of what's going on in Mexico and the EU and Canada and China and Japan and Australia and Russia and the United States. What are they thinking right now? And I think, it'll be really interesting to see. I think particularly watching the Treasury, right? Like to me, that's probably the critical metric here, because that when if the Treasury starts to go up and people are pulling big amounts of money out of the Treasury, that is a direct impact on the strength of the dollar, right? And then like it's kind of like you get to maybe a critical threshold with the dollar where all of a sudden it's not the reserve currency anymore. Like, man, that's an absolute game changer. And again, I don't want to go back to this like doomsday cataclysmic scenario. Here's what I want to think, Randy, and like to bring this full circle. And I'm guessing you and I will probably agree on this. And again, I'm a wired optimist, right? So caveat there, but like I personally think that what we are going through right now is a necessary, not evil, but it's like a necessary thing that we need to go through to level up into like the next best version of ourselves as a country. And by the way, one of the things about living outside of the United States for me, which I didn't do until I was 50, is appreciating like the United States. And like traditionally I've been a fairly progressive, mostly voting Democrat like my whole life, I love our country. I truly, truly love our country, but I love it so much more now. And and because and I think we're kind of all seeing this. Like
Yeah.
I'm seeing like what we have had in the way of like this like what we've just spoken to, right? This beautiful system based on trust and like that, like kind of our highest angels, if you will, um, going to work and like creating win-win opportunities for each other, for our trading partners, for immigrants, for the middle class, the working class, and and so what I think is like this is all perfect in that we're seeing like we're taking a look down like shit. We don't want to go there, man. Like that is not like we do not want this to happen
Right.
on so many different levels, and I don't think it's productive to maybe even bring up like specific issues even beyond economic right now. But like, um, so I just feel like it's a wake up call for us as Americans, and you see that in whether you agree with them or not, the 36,000 people that are showing up in rural California for rallies that are people that are legit concerned about what's happening with the wealth that is being systematically stripped from the working class to and going to the 0.001%. Dude, I heard this thing last night. The 14 richest families in the United States, their net worth went up in 2024. Their net worth went up by $1 trillion. 14 families. Like, that is unbelievable. And it's like, so when you look at that honestly, like, is that practical? Like, is that good? Like, is there like, is that like, does that really serve the whole system well? And in fact, is it like a threat to the very system that it's built on, right? Because you're taking from the engine what it needs to function and build these badass companies with badass products and Teslas and everything else, and and you're taking what they need. You're taking their oxygen from them, just so that the people that have plenty of oxygen at the top can have some more oxygen. And so, like, I don't know. I think that some of these things needed to be seen clearly, and I will humbly say I did not see all this stuff clearly at all. I mean, I kind of did, but like I'm seeing it like in I think pretty crystal clear ways now. Not that I know everything that's going on. I think that's ridiculous claim to make, but I don't know. I see like us, like this is something that we get to decide now how this goes from here forward. And I believe in us. Like I believe in our educational system. I believe in, the people that ultimately have the best intentions in their heart and their mind, understand the power and the necessity of like win-win, like this is not a zero-sum game, right? Like this is like we need everybody to win here, right? And so I don't know, man. Again, like that's my TED talk for the day. What are your thoughts?
You give a lot to unpack there, my friend, but a couple of thoughts. One, I would say is that I don't want to get political with you or anybody else in your phone.
Yeah.
But, we, as a society, we shifted one way. Current administration has swung way back to the other side. Let's hope we find our equilibrium, as you set out on a micro level basis without getting political.
I don't disagree. By the way, I don't disagree in any way with what you said.
Equilibrium. Some of the things that are going on are, in my opinion, spot on. Some of them are absolutely terrible.
Mm-hmm.
So, and then the other one in terms of your richest Americans, though, I've recently been watching on the History Channel, The Wealthy Men of America. And so it goes back into the 20s of the Rockefellers, the Vanderbilts, and the Carnegies.
Yep.
And they built this nation into an industrial powerhouse. From the railroads to the oil and gas industry to the steel industry. And I think they made Bezos, Gates, and Zuckerberg look like neophytes in terms of what they controlled at their period of time. And I think that America's economy today is shifting from that not has. It's shifting to that service or that intellectual economy of the internet, of all things internet service providers and stuff. And so
Yep.
I don't want to see these guys rule the world. And I think some of them are going to be broken up. I think Google is on the verge of being broken up by the court system, just like Rockefeller.
Meta for sure. Like that, the Meta.
Meta's on the verge of being broken.
Yep.
And I don't disagree with that. But those companies have redirected America into a service-based economy. And, try to live without the internet for a day, right?
Yeah.
I got a new phone the other day, and I was just cursing the amount of, re-sign-ins I had to do and reconnections. And it's like, oh, but now that it's done, it's a beautiful thing, man.
Yeah.
AI is just fascinating to me. I'm a curmudgeon, but it's fascinating to me how I use it for, deep market research recently on Maestros and trying to find all my competitors and what they say. For $20, I can go out the ChatGPT paid subscription and get research that I'd never be able to afford before. If you want information, the amount of information that's available on our fingertips at this phone today is just incredible. So I think summarize, we need to find our equilibrium as a country, but there or none, man. I've traveled the world with business. I've been to Mexico, no disrespect. I've been to Asia. I've been to Africa. I've been to Europe. Every time I come home, I get down and kiss the ground because it is the finest place in the world.
Yeah. I mean, that's something that I've heard people say. My grandparents said the same thing. And, my both grandfathers were fought in World War II. And like, I've had an appreciation for that. As a kid, growing up in suburban Cincinnati, you kind of take that for granted a little bit.
Oh, yeah.
And then you live a little and you travel a little and you live somewhere else in a different country. And it kind of like it starts to really become clear. And I get it, man. Like, we are so blessed as a country. It's first of all, it's just absolutely beautiful. Like, especially like, say, the Rocky Mountains and West. And not that I've spent my life vacationing on the Great Lakes, and there's other beautiful parts of the country, but the stunning beauty of some of those areas, and look, there's other beautiful places on the planet too. Canada,
sure.
But then I don't know, just like I'll say this too, like the richness of, like, no other country was built completely on the population base imported. It's an imported population base, right? I mean, the population base that was here before Europeans started settling was essentially eliminated or, completely marginalized. And so, which is a completely different conversation. And in my opinion, one of our, parts of our darkness and our dark past. But so you talk about the Rockefellers and that group. Like, they couldn't have done what they did without, like, the Irish immigrants and the Italian immigrants and the immigrants from then when you get into the South and talk about slaves, right? Like, so we end up with this mix of people from all over the planet with different genetic lines, different skin colors, speaking, like, on the island of Manhattan, I heard one time, like, 90 different languages are spoken on one island. Like, that's a tiny island, dude. Like, and there's 90 languages spoken on it by different people in New York City. So, like, I just think that is, there's no other place in the world like that. And I think it's one of our absolute greatest assets. And it's proven to be over and over again. And it's why, like, our ability to attract the smartest minds on the planet to our universities, our research institutions, like, we have like teed off and capitalized on that. And, whether it's the Rockefellers or whether it's Musk or, Bezos, like, they're all the benefactors of that. And so here, I'm gonna end with this, and then I'll give you the last little word here. But here's what I think: those guys, like, to a large extent, I mean, you and I, Randy, like, our heart's in the right place, right? I can tell yours is, I know mine is, and, like, we legit want to do the best we can and influence the planet and the people around us and our communities with the best that we can, and have those outcomes be positive, right? And like those guys need to like make some decisions here around like what are they living for? Like what's their ultimate like ideal outcome? What's their ideal outcome, right? Like if you're Jeff Bezos, like what's important to you, right? You've got like how many yachts and how many houses and like so what are you building? What kind of legacy? What do you want to be known as? Like what value set do you want to be remembered for? And like I think like to some degree it's up to them. It's not totally up to them because I think they respond to market forces and political forces and populism force, like the people rising up, et cetera. And like I'll never say that I think we all can do lots of great things and big things and important things and have influence. But like at some point, like the guys that are not only holding, all the cards, but like continue to like, I mean, again, 14 families, $1 trillion in 1 year of net worth increase. They need to like look at like, okay, is this really good for me? Right? What about my kids? What about my grandkids? And what about their future? And is it good for them for this to continue? Because the reality is like, it's just simple math. Like you look at where their wealth has come from. It's come from the middle class, man.
Oh yeah.
So anyway, I'm off my soapbox, bro. Like I'll give you the last word on all this.
I got to chime in on that because I'm an older man than you are, and I've been really. I mean, you summed it up, and let's personalize it for your audience. What do you want your legacy to be, rather than Jeff Bezos? What do you want your legacy to be? And I can tell you what I don't want my legacy to be is that Randy was the greatest real estate investor, which would be a big stretch, because I want to be known as a husband, as a father, as somebody that gave back to the community, and I'm sure you do too, my friend. And we do real estate because it provides the ability to do those things. What's your legacy? And I think people talk about beginning with the end in mind. I'm in the process of doing this right now. What's my epitaph going to be?
Yeah.
What I'm doing this. Well, what am I putting on my tombstone?
Yeah.
And what do I want my kids to say as they're standing around my grave one day? I've stood around both of my parents' graves, and as the casket is going down. And so you're absolutely right. And kudos, Gates has given away half of his estate already. Bezos gave half of his away in a divorce.
Warren Buffett, I don't think Bezos deserves any credit for that. That was forced on him. But let's say with Gates and Buffett, like I think that those are good arguments.
But I would say the thing about Bezos, though, is his ex-wife, Mackenzie Bezos, has already given away more than half of the $40 billion she got in the divorce.
And good for her, man. That's there. She gets it. Like, okay, I've got 40 billion. I can give away 20 billion and then still have 20 billion. Like, is that enough? Yeah, I think that's enough.
Yeah, I think I read something she's given away like 25 billion already.
Yeah.
In 2 years since in her. So it goes back to, and you summed it up well. Let's leave it there. What's your purpose?
Yeah. I love that you referenced your all of that, what you want to be remembered for. And like you brought your parents into this conversation and like what it's like to bury them. And dude, both of my parents are still alive, and my dad's 78, soon to be 79, or maybe 79, soon to be 80. And my mom's going to be 78. I cannot imagine what it's going to be like to say goodbye to them. And this is so perfect. The synchronicity here, just inside of this conversation. I literally sent my dad a text yesterday and said, Dad, and I've never asked him anything like this from him before in a conversation or a text message or anything else. I said, Dad, what do you want to be remembered for? And my dad's a pretty quiet guy, and I'm not sure how that's hit him. I haven't gotten a response back yet. I sent him a follow-up text, and I said, here's what I'm thinking, right? Your warmth, your sweetness, how much you love to sing and how beautiful a singer you are, how good of a dentist you were, the achievements that you made inside of the dental industry. And, he was what's the word? Not chairman of the board, but whatever, of the Ohio Dental Society and Cincinnati Dental Society. President. Yeah. And, when he retired, those institutions, threw him parties. And it's not lost on me, number one, that I want to know that stuff. And I want to know for myself what's important to him. And I want to be able to tell other people what the answer to that is, but like pat myself on the back at all. But like that has to be a massive gift to him to be given the permission and the prompt to like consider that,
Well, but here's my challenge for you, my friend. As a late baby boomer, get off the phone and call him.
Yeah.
Tell him how much you appreciate him. Tell him that you wanna really one day be able to articulate what he wanted to be known for.
I love that.
I mean, talk to him about it. I mean, I remember asking my dad lots of questions like that. And anyhow, you'll both sit there and cry together, but it'll be a great experience, man.
Perfect. I think that's perfect. What's that? I'm sorry. Say that last one again.
I'm pretty philosophical here now all of a sudden.
Yeah. No, this has been amazing. I love this. So Randy, like tell the listeners like how to reach you, what you have to offer them.
Well, Tate, first of all, I just really want to thank you for being on here, man. This is, it's been great because it's not all about real estate. We're talking, getting to know each other, as you said, and building a relationship. So I'd love to get to know any of your audience if they want to talk about syndications. My syndication business is invest-ark.com.
That's a great brand, man. InvestArk. I love that. ARK, listeners. Yep.
ARK. Thank you. And the education mentoring business is Multifamily Maestros, all one word.com. Mm-hmm. There's contact me on both those. I'm on social media, Facebook, LinkedIn, others. Reach out to me. I'd love to chat with you about anything. But
yeah, you actually have a couple of value adds just on your landing page, like just Multifamily Maestros alone. I believe you have a few resources there for people for free, right?
One of the ones, there's a free one there, and then there's also the one that we talk about is for those who don't want to necessarily be a GP yet, but for $97, we're offering a passive LP course, how to be a passive LP and take action.
I can't resist this because it came up for me earlier. To me, like another like industry lie is that this whole label of passive investing. Like if you're truly a passive investor, in my opinion, that's too risky. Like you really have to know what you're doing as an LP. Now, I will say this. I think the LP position in these syndications is like, it's awesome. It's you're secure, you have ownership, you're first to get paid in most cases, a lot of cases. And it's very, very compelling, but you have to make good decisions and good calls. And that starts with like aligning yourself with the right people and the right operators first and foremost. You need to know how to proper due diligence on them, on your team, on the people that because ultimately you're investing in a human team that is going to be operating this thing. And then, you have to have, in my opinion, you have to have some understanding around analyzing an asset. Some people would say you need to be able to underwrite a deal, maybe. And so I love that you have that for LPs because I think that's super important. So, so multifamilymaestros.com and invest-ark.com. Randy Langenderfer, thanks, man. This has been great.
Hey, let's do it again sometime.
You bet. Love it.
Have a good
Take care.